All right, so in this video, I want to go over the Forex currency correlation. And it's important to know what pairs correlate with each other because you don't want to create a situation where you're creating a double negative when it comes to trading the markets. And let me show you what I mean by that. Say we're picking Euro NZD here, and I'm looking to sell Euro NZD. If I'm looking to sell Euro NZD, I want to make sure any other currency pair that I'm looking at, I'm not taking a trade that doesn't match up with my trade with Euro NZD. So, for example, if I'm trading Euro NZD and I see that the United States dollar, Canadian dollar has a negative correlation with Euro USD, I'm not going to sell Euro NZD and UCAD at the same time because it has a negative correlation. If I'm looking to, I guess, add up to a currency pair, so basically meaning that I'm kind of doubling up on a currency, I'm going to look for a pair that has a high positive correlation because if I'm buying Euro NZD and AUD NZD, and that's working out, then both of those pairs are going to win. Now, do you want to double up your pairs like that and double up your risk? That's up to you. But if you're looking to find correlations in the market and take advantage of those correlations, then you can use that. The other way you can use to take advantage of a correlation is say you're looking at selling a particular currency pair. So let's look at right here. Canadian, the Canadian yen pair. If I'm looking at selling the Canadian yen pair and I'm just trying to see if my sell looks correct or if I'm looking at the right things that I'm selling, I'm going to go to another pair that correlates with Canadian Japanese yen. So, for example, the Great British Pound Japanese yen. And I'm going to see if the setup looks similar on that pair because a lot of times when you have highly correlated pairs, then your setups, your markups are going to look similar on multiple pairs. So if they look similar on multiple pairs and they align, then that gives me an opportunity to where I can see that, hey, this is setting up on multiple currency pairs. This may be the right way to go because it's setting up on multiple currency pairs. But if I'm going and I look at GBP, JPY, or maybe UJ, which is another correlated currency pairs, and they're all looking strangely different. Like their formations are completely different from each other, and it's no similarities in the way it's moving, then maybe, it may not be the best time to place that trade because the charts aren't lining up. So you can use this to see what pairs are moving like it. You can use it to say, well, if I'm selling UJ, I want to find a pair that's opposite of UJ. I can go down here and see UJ and then see that the Australian dollar, Canadian dollar has a negative correlation. So if I'm selling UJ, there's a chance, there's 70% chance that AUD CAD will be going up if UJ is going down. So this is a couple of things that you can do to kind of line up your trades because you want to pick a certain set of rules, and forex correlation or correlating currency pairs can be part of your rules when it comes to validating a certain trade. So that's why learning this or knowing what this is pretty important. Way I do it to find is I use my fxbooks.com. You can go to market and then you can go do correlation right here and it'll give you this page here. So definitely add this to your arsenal of trading, and hopefully this is a good tool for you to use because it's been a great tool for me.